Hi, welcome to the Market Alert for Tuesday, the 11th of September 2018. So yesterday, the pound moving higher, as I've warned in the Market Alert, that we've got Brexit news coming in all directions, good, bad, indifferent. Yesterday, it was the turn of the good news camp, or that's the way the pound interpreted the news. Barnier yesterday said that a Brexit deal for November is realistic. We'll wait and see on this one, but of course any type of rhetoric like this is going to send the pound higher because it looks like the uncertainty is being removed, and that's precisely what we saw yesterday. However, look at the volume for yesterday. Was there really any buying of the pound yesterday, or was it a case that the market was just moved to the upside? So in the intraday, you see the market going short to begin with, the market finding support at the 129 level. You've got the buying pressure here, market moves higher, you get your retracement. We had a buy signal, and then purely out of luck, Barnier makes an announcement and sends the pound higher by 100 pips there, and then straight into selling pressure here, which you can see, and that stopped the market at 130.50, and the market has been sideways on the overnight. But as we see the start of today's session, we've already got some buying here, and price is taking out yesterday's high where it met with the selling pressure here, which you can see in the price chart there. So this market is going to be news driven, that's for certain, and especially as we head towards this now so-called date that Barnier has put on the table, November, you're going to see a lot more volatility in the pound, which is good, so keep an eye on this one. The daily chart, we've looked at prices moving higher. We're above the 50 bar moving average. So what I would be inclined to do in this chart is to work my way back up to these highs and see where the 76% retracement is. If I go from this high, I am sure that we will have already taken this one out. Not quite, there you go. So that's the next high, 130.80 is the 76%, and once this one's hit, I'll move back to this one and to this one until we get back to another major high. But it's what I call the rolling fib retracement, and it's ideal for working out where there's likely to be resistance. So we started off with this one here. Well, now in this one you can see these points where they're left behind, and then we'll just use these just to see how the market fares at these levels. And I know for certain that it will struggle at this level, because it's always seemed to have been the case with a Fibonacci 76% retracement there. So it'll need to drive through with some increased volume in order to do so. Keep a note of this figure, and you can transpose this into the smaller time frames, into the 15-minute. I just draw a vertical line, which I've shown before in the alert. Meanwhile, in the Dow yesterday, this market was down. I get the right chart, there we go. Starting off with the daily chart, prices were down yesterday, and there was some selling around for certain. But prices managed to, or I have managed to get back up with the 25,880 on the overnight, which relates back to this high. What we could do here, let me just grab a 0-point extension, because we've got seems like a double bottom here at this level, which is 25,800. If this is broken, then we attack the 76% retracement there. However, to move back to the upside, again, if we just get the fib retracement, we've got a high over here on this bar. So from this high down to either this low or this one, they're both the same. You'll see there that 26.082 is where there would be some resistance to the upside. The market's definitely in a sideways range. You can see this, it's crystal clear. So when this market breaks, it's either going to move sharply to the upside, or we're going to the downside outside of this trading range. It's hard to say what it's going to do, but certainly as we go towards October, I think things are going to heat up a bit, and we're going to see a bit of a move to the downside. The emerging markets are not improving. There's a lot going on, mainly manipulation to keep these markets at these levels. It's quite incredible, really, that they're still at this level. It just goes to show that there is a lot of manipulation. Also saw an article yesterday that China is now buying the Chinese banks and governments are buying Chinese stocks to keep those supported as well. I wouldn't be at all surprised if the US Treasury isn't doing the same, frankly. Certainly Japan have been doing that for some time. So the intraday moved lower to begin with. We've got the retracement, and then once the 200 bar moving average was broken, which you'll see here, we had selling on this bar. The market then started to move lower. We've got a bit of support here at the 25,950 level. You can see the market testing quite a few times here, but eventually then breaking here and down to the next support level before bouncing back 50 points and then moving lower again. See how the market stayed below the 20 bar moving average until we got towards the close, where the market found a bit of support and then started to move back to the upside there until after the session closed, and then prices again reversing and moving lower. And on the overnight, market sideways to higher, just about to have a look at the 200 bar moving average. Watch the DP level for this market also. Bitcoin, not a lot to report at all. Very sideways. You can see this in the chart. And again, if I was to make a judgment on this one, or an opinion, either a shakeout to the downside, still waiting, but certainly October before we see something major happen in this market, along with some sort of crisis that the emerging markets bring in the collapse of the currencies globally, which we have seen, and no doubt will continue to get worse going forward. Like I say, not a lot to report or a lot to see here at the moment. Right, so that will do it for this one. If there's anything to report later, I will let you know. But other than that, as ever, thanks for watching. See you in the next one.